Hey guys, there's a nice opportunity coming that's going to allow us to make a quick profit. Yeah, a quick 240 bucks. In today's video, I'm going to show you step by step how to make money on an easy trade this week. Be sure and watch all the way to the end as I'm going to show you why is now the right time to sell a strangle in DocuSign. How to place a strangle option trade in DocuSign using options in the most efficient and safe manner, showing a real example on the option trading platform. And finally, an extra tip to make even more money on a simple follow-up trade adjustment. Hey guys, Darren here. We've got a great video for you here today. Before we start, if you appreciate all the research that goes into making a video like this, all I ask is that you hit the like button or subscribe. It helps out the channel tremendously, so thank you very much, guys. Today we're covering a stock that has earnings coming this week. It's a stock that I really like. We're going to show you the perfect strategy and how to make a trade and a quick profit. I think it's super important that we understand all the ways that the rich are getting richer so that we can do the same. We want to understand the different strategies so that we can profit in any market. And also be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Why is now the right time for a strangle in DocuSign? Guys, we want to sell strangles when IVR, implied volatility rating, is high and when we think a stock is going to trade within a range. Why when IVR is high? Because that is when we can collect more option premium and go wider selling our put and calls, and we can have a larger range for the stock price to move within and still be profitable. What stock has the perfect setup for a strangle option trade right now? Let's take a look at the 1-year chart for DocuSign, ticker DOCU, on TradingView. The stock price is currently trading at $51 and IVR is high at 24 since there is earnings coming out on Thursday, September 7th after the bell or the close for the day. We see that there is some pretty good support at around the 45 level and resistance at around the 60 level. IVR is higher and expands just prior to earnings, since if the earnings or the guidance going forward is bad, the stock price will likely drop. Notice I say likely, sometimes it doesn't. If the quarterly revenue and earnings are good and beat expectations and the guidance going forward is good as well, what do you think happens? Most of the time, the stock price moves up. Besides just looking at the chart, we should also do some research so that we know if the company is a good or bad one. DocuSign had a high growth rate of 25% last year and extremely high during the pandemic as many more documents were forced to be signed electronically. However, now with the potential economic situation, few customers are adding nice-to-have products, and they're just sticking with the existing products from DocuSign. Their customer retention is good. As the economy improves and customers start to spend again, I believe that DocuSign can upgrade clients to more products like automated workflows, agreement generation, and contract lifecycle management. The forward price to earnings PE ratio seems fairly priced at 20 and is lower than it has been in a while. Revenue and net income continues to rise year over year, and the balance sheet is steadily improving as well. How do we place a strangle option trade in DocuSign using options in the most efficient and safe manner? All right, we're going to take a look at how to sell this strangle on the option trading platform. We're going to use TastyTrade. TastyTrade is one of the best brokerages for trading options. It's the one that I've used for many years, and they're the guys that developed TOS, the Thinkorswim platform, and sold it to TD Ameritrade, which is now Schwab, and the one they use today. TastyTrade is even better. Right now, you can get cash back when you open an account. I'll put a link down below, and if you fund with at least $2,000, the channel does get a small fee, and it's very much appreciated. There's absolutely no cost to you, and you need a couple $1,000s anyway to place a few different trades. So we punch in DocuSign, DOCU, in the upper left on the trading platform. Make sure you are on the Trade tab. This pulls up all the different option chains. We will click and open the October 20 regular option chain that is 46 DTE, which stands for days to expiration. At 46 days, we can collect a good amount of premium and still go pretty wide with our strikes so that we have a large profit range that we will want the stock to stay within in order to be profitable. Now, a strangle consists of selling an out-of-the-money put option and another out-of-the-money call option. We will click on the bid to sell the 45/20 delta put option and the ask to buy the 60 put option. We collect $241 to sell this strangle. This trade has a 69% probability of profit, or POP. So we have a much better than 50% chance of winning on this trade. Switch to the curve mode by clicking on the upper left where it says curve while still on the trade tab. Now we can see that large profit zone in green. As long as the stock price stays within that range by the end of the week on Friday, October 20th at the close, then we keep the entire $241. Now remember, our probability of profit is 69%, so you know what that means. Our probability of no profit is only 31%. I'll take those odds. Finally, an extra tip to make even more money on a simple follow-up trade adjustment. Hey Darren, are you always right about these trades? Are you certain it's going to be profitable and I'm going to make $241? Nope. Trades do not always go our way. Again, I like the fact that the strangle option trade that we are placing does have a 69% chance of being profitable. And the stock price has been trading within that green profit range for most of the time over the past several months. However, sometimes trades just don't stay within the expected moves. Revenue and earnings come out, and there's sometimes unexpected results, or management's guidance going forward is less than desirable. So if we are a winner, we can close out for the win right away on the opening and bank our profits. IVR will have collapsed or dropped right after the earnings announcement, so much of the premium will have come in, and we will be able to close and keep quite a bit of the $241 collected. If it is still in the middle of our strikes, we can also wait to collect more of the $241 as we get closer or even all the way to the expiration date. This is a choice that we can make. If the stock price moves outside of our profit range, then there's something else we can do, and I often do this. I roll the winning side or the untested side of the strangle up to collect additional premium when the market opens. IVR is still in the process of coming down. However, we can collect additional premium and move our profit zone. Often, the stock price comes back into our profit zone when we do this. One final important message. You don't want to put this trade on right now as you're watching this video if we're not at earnings yet. Earnings comes out on Thursday, September 7th after the bell. The stock price may move very likely between now and that time. So you'll want to put this trade on just prior to the close on Thursday the 7th and center your strikes. All right, guys, if you're a beginner and this sounded a little bit confusing, don't worry. It did for me as well at first. We'll continue to cover different option trading tips and tricks and details in future videos, so we'll learn together. I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Let me know any comments, any questions that you have, and I'll be sure and respond. Thanks for watching, and see you in the next one.